Hello, everyone. Hope you're having a great day. Ed Fontes here. Look what I have. The crystal ball. Look at that thing, man. That thing. Look, can you see that thing? That thing's turning, burning, baby. Folks, there's no such thing as a crystal ball. Where are you getting your information from? What crystal ball are you listening to, and who are you listening to? You know, to this day, over a year, I've had clients tell me, I'm going to wait. I'm going to wait till rates come down. I'm going to wait till prices come down. What? Where are you? Who's telling you this stuff? I had some clients, their own friends and family members told them, now's not the time to buy. You don't need to be overbidding. Just wait. Wait till when? We don't see prices coming down. Those people have lost. They lost equity because a year ago, basically, by the great Barry Habib, the number one prognosticator in the United States, if not the world, folks, has stated that we had, and his predictions came true about appreciation. You know, we had over 11% appreciation. His predictions came true in some areas, and this is across the nation. Some areas, 12%. You know, that doesn't count the little pockets of 15, 20, 25% in some of our local neighborhoods or your local neighborhoods as well, that we've seen appreciation. And what do the Feds say? Oh, we're going to still see by the end of 2022, still a 3 to 4% appreciation. That's still a positive number, folks. What's going on with you? You know, I tell the stories about the lady, the single mom with her kids. 2 years or 3 years ago, it was in the 5s, the 4s, her interest rate. She refinanced in the low 2s, and she had over $150,000 in equity, folks. $150,000. She tells me, Ed, there's no way I could have saved that amount of money in that short a period of time. And we're just talking about a simple home, folks. You know, the higher you go, the higher the value. Yeah, sure, you're going to have more equity, but you got to jump in the game. You got to jump because that's when your equity starts. Not a year from now. You know, those that would have purchased a year from now that did not purchase, they would have seen at least a 10% appreciation, which was, you know, $500,000 home. That's $50,000, folks, 10%. You know, could you save $50,000 in a year's time? Some people can't, and some people don't. And the thing is that's why you purchase a home, to build that equity. You know, I talk about the kids that bought in that blight neighborhood, and they increased pride of ownership in that neighborhood by all the people that moved in. They painted their houses, did their landscape. They created the environment. And that's what happens when you move into a neighborhood. Doesn't matter where it's at. And doesn't matter if people say, oh, that's a bad area. Is it really a bad area? Have you talked to the people in that neighborhood? Have you heard of anything going on in that neighborhood? No, it's not a bad, and it wasn't a bad neighborhood for those folks. To this day, those folks were able to move into a location we call in our area Plumas Lakes. They used the down payment money from the sale of their home, the equity they had, and was able to qualify 4 kids later for a 5-bedroom home. Everybody had their bedrooms. Folks, that's what equity does. Your first home isn't going to be your swan song unless you got a lot of cash to put down and then you qualify for a higher purchase price. But I guarantee you, every folks that I have done that have moved up 1, 2, 3, maybe 4 times, 5 times, and then it's been able to go ahead and use the equity from the prior homes and continue to move up, folks, and almost maintain. Actually, a lot of them got lucky because of the low interest rates in the 2s. When we had them in the 2s, were able to purchase. And, you know, there's still some FHA, VA loans that are in the 2s right now, but you got to pay discount points. You know, we have several issues that are coming into effect and coming into play now. What's the number one issue now? We have the tenants. Basically, that moratorium has ended. Tenants are now being evicted. I have some of my clients are property managers, and they've got a buku amount of properties that basically they're told me, Ed, this month my investors are going to eliminate their properties. They're tired of people not paying rent. They're tired of having to make the payment. What the heck is going on? They are done. You have 50% of their inventory with these property managers that I personally work with are going to go on the market. What does that mean, folks? Like I always say, inventory, woohoo, inventory, woohoo. Yes, so be ready. If you're a buyer, get pre-approved, not pre-qual. You need to be fully underwritten, pre-approved, and be ready to go. And you know, AmeriFirst Financial, our company, we are paying cash for our buyers' homes. Yes, you heard that right. We are buying the homes that come on the market that are overbidding and everything. Our company is paying cash for our buyers. Our buyers have to be pre-approved with us. We have to have an inspection report. We close it, the fastest we've closed has been 3 days, normally 10 days, but we need an inspection report. So if you're a listing agent and you're putting these properties on the market, you make sure you get your inspection reports up front. And you should anyways. You should have your smoke detectors in every bedroom. You should have your CO2 detectors, hot water heater straps. I mean, that's what an appraiser looks for anyways, right? And that's what we got to do here. But let me tell you, these guys are going to put these properties on the market. What else do we got going on, right? I mean, I had one of my personal clients hadn't had a client pay in 14 months the rent. And what does she show up with? A brand new Mercedes in her driveway. The tenant. How does that happen? You can't even afford to pay rent? Really? The judge saw that. The judge just got her. You're out, lady. Evicted her right out the gate. That's what we're going to see happen. We're going to see people being evicted. We're going to see people putting the property on the market and selling them. You need to be ready if you're a buyer. You need to be ready. And if you're an investor, maybe it could be opportunity time for you to purchase now. I don't know if you want to deal with those headaches, but we got a lot of people that do. So we also have the forbearance agreements, folks. The forbearance agreements, basically, for those that live in a home that purchased maybe a year ago or whatever, even that if you've owned a home for 5, 10 years, whatever the case may be, and got out of work because of COVID and the situation, what happens? Well, that's going to end. And what's going to happen is either you've got to work with your lender and modify your loan, have the interest and everything that wasn't paid back to the end of the loan term, 30-year term, 31 years, 32, 33, whatever the amount is that is owed back in payments, right? There are some servicers and lenders that will not modify your loan. So you've got to do one or two things. You're either going to refinance or you are going to put your property in the market. There are lots and lots, thousands and thousands of clients that have buku equity, that have owned their homes over the years, that can decide to sell. I know I've got clients that are selling right now that are moving to Idaho, Washington, Nevada, Arizona, Texas, right? And you guys know who you are. But anyways, get on the bandwagon, folks. Get pre-approved and get into the home. Start the equity today. Now, these forbearance agreements, basically, we've got a lot of other clients that are going to refinance and are refinancing. But you got to remember, if you haven't made a payment, you have to make 3 monthly payments on time before we can refinance you. Period. That's the guidelines. No ifs, ands, or buts. You can't make all 3 payments in 1 month. You have to make each payment every month, and then we can turn around and refinance as long as you qualify. And what do we got folks doing? We got them refinancing for debt consolidation. We got them for home improvement, and all 3, debt consolidation, home improvement, and reserves in their pocket to save and make sure that they have enough funds for a rainy day in case something happens down the road in the future. And their monthly payments don't increase that much. I got a guy that we just finished refinancing, and he was in $3,400 a month. $3,400 a month on payments. He had a car payment. He had buku credit cards. We paid it all off. His house payment only increased $200. And so that means that he's saving $3,200 a month, folks. That's a huge savings. And you would do the same thing if you saw the numbers. So you need to look closely at your figures right now. Where's your money going? Are we going to have a catastrophe here? Because we got a triple whammy coming on, folks. The triple whammy basically is inflation is at a 30-year high. How does that happen in today's economy? Well, we know why. Look what's going around with this government. Look at the games they're playing. Look at all the people that are suffering. What does inflation mean? That means the cost of goods increase. That means your food, your milk, your meat, your clothes, gas, everything has increased. I got one client that took a trip down Highway Coast 101, on the ocean, shot me a picture of gasoline, $8.99 a gallon. That was regular. $9.50 for premium. What the heck, folks? Right? That's inflation. Welcome to California, right? But that's what I'm talking about. We've got the inflation. Now, Fed Chairman Powell announced 2 weeks ago they're going to taper off on purchasing mortgage-backed securities bonds, basically. And what happened? They're going to stop that in November, but he's saying that now. What happened? We had a frenzy on interest rates. We had rates increase tremendously. That same person that wanted that same rate basically was not paying discount points is now paying discount points. Folks, there's no secret to the game. You just got to get into the game and start the equity process. It doesn't matter as long as you qualify for what you want, and it's going to cost you an extra discount point, which is equivalent to 1% of the loan amount, or whatever amount and whatever discount points they charge. But the bottom line is get in as long as you still qualify and buy now. And that's what we're seeing right now as far as the frenzy's going on. What do the Feds also say in the same breath? Oh, we're going to keep rates down till the end of 2022. Yeah, well, we're rates basically seen in the threes now, high threes, that you're going to see that are affecting people, because if you're qualified in the twos and you're now in the threes, guess what? You don't qualify for that amount anymore. And that's, you were holding off because rates were going to come back down? I don't think so, folks. I don't know what crystal ball you have. Don't listen to the naysayers. Oh, don't be buying now. I've had families tell our clients, their family, oh, you don't need to be buying. You don't need to overbid. What happened to all these people that overbid? They have equity in their properties right now, right? No secrets to the game as long as you buy right. So those of you sitting on the fence, you need to jump. Those of you that are thinking of selling, you need to sell. You need to get your property in the market. Rates aren't going to come down in any time, and they're going to level off. And what's going to happen when all these properties hit the market? Well, values are going to level off. You may not get as much as you want anymore. So what are you looking at? So the bottom line is are you looking at wanting to get out of Dodge? Because I have clients, like I said, that are going to Washington, Idaho, Nevada, Arizona, and Texas. And soon, some are going I've got a few that are going all the way to Florida, Georgia, South Carolina, North Carolina. You know who you are. So jump off the fence, give us a call. We're here to help you. We're here to provide you this information. And we're always going to keep you up to date on where your rate is. And I'm going to tell you whether I get reports. I subscribe to a report. And I'm going to tell you, when I get a notice, alert to lock, which I posted last week and this week when we've got the notifications, alert to lock. And I posted that and I said, you better call your lender. Even if you're with a different lender, and I post that, you need to call your lender, tell them, lock my loan, lock my rate. Why are we playing this game? And the bottom line is that if you're not happy with your lender, then give us a call. We're here to help you. Me and my team are here. Y también hablamos español a todos, okay? Todo mi equipo hablamos español, okay? So give us a call, 916-712-8509. Email me, efontes@amerifirst.us, or just go apply online. It's that easy. www.edfontes.com. www.edfontes.com. All right, folks, I hope you're doing well. I hope this helps. Hey, share this with a friend. Subscribe. Click the subscribe button, and you'll be notified every time we post these updates. Have a great day. Be blessed.